Right now, we are advantaged by Alicia Levine with BNY Mellon as we look at these equity markets. Alicia, did you go to cash yesterday?
I did not go to cash. I got at my shopping list, actually. Look, as you've pointed out, we're 3.5% below the high. That is not something to really write home about. And as you all know, the average drawdown in any calendar year is 14%. And in this year, we never got more than 4%. We keep on bouncing off that 50-day moving average. So if we do something worse, it would not be something so out of sync with how markets typically behave. It was pretty ugly, though. And of course, the bond market is really leading this. And I think this morning's action suggests, if you look at the bond market and the kind of tepid action we're seeing from equities in the pre-market, I think there's probably more to go here on the downside. It's not fatal. It's just taking some of the froth out of this market and unwinding some of those trades that were really, overworked, all into cyclicals or all into tech. And tech was the last thing to come apart, which was yesterday.
Where do you think the leadership comes from next, Alicia? And what are the signs you're looking for as we correct?
So I like playing contrarian here. I think that even though we're mid-cycle, we're not early cycle, and we're definitely in that peak moment, as you've had conversations all morning about. We're in that peak moment, peak growth, peak fiscal. I still think we have a ways to go on the cyclical recovery here. This is a good scare. I'll just remind all of us that the U.S. really has exhibited really kind of an exceptionalism in the amount of fiscal policy, the amount of monetary stimulus, and also in the way we vaccinated the population. And because of that, I'm actually very bullish. I think cyclicals do work here. You may have trouble in the financials because of the yield curve flattening, but I think the cyclical recovery is here. We are not yet hearing about margin pressure. We're hearing about inflation, and we're hearing about the ability to pass on costs. So down the road, we'll probably have stickier inflation, but the margins right now are hanging in. We will learn more this week. If those roll over, I think you have to start heading more to your more defensive sectors, staples, utilities, and healthcare. But right now, I would really go to the cyclicals because they've been destroyed.
Yeah, on the margin question, though, we saw the likes of Siemens Energy. We've seen it with ConAgra. Those pricing pressures are showing up in a very real way. And when we talk about the ability to pass costs on, the consumer isn't necessarily having more dollars in their pocket to pay for all of these goods and the higher prices that they are faced with. Do you expect that to become a problem? And how do you factor that into allocating within a portfolio?
So I think it's a bit of a dance. I think that we have to think about the stimulus that's now coming further from the government. 39 million households are getting monthly payments of child tax credits per child, $300 per child. So these are the households that have a propensity to spend, right? So it's not the high-income households. High-income households will save. The lower-income households who are eligible for this will spend. So you do have some fiscal here being able to support the economy here. Look, I think margins are near their peak, and it's been very impressive how corporate America was able to survive the pandemic and retool companies. And I think you're seeing some of the benefit here in EPS. So EPS alone has gone up about 10% just for the second quarter as earnings season has rolled in. And that'll move higher. The concern is 2022, because as 2021 has moved higher, 2022 earnings expectations have not.
Can that cyclicals trade, though, Alicia, can that work at 118? Can the kind of things you're talking about work with a 10-year at 118?
Look, first of all, since we're at 118, we're probably going to test 112 because 112 is the 50% retracement. So I think that's probably in the ballpark here. But I have to say that on the fundamentals, I have to believe in the fundamentals. Yes, there are market moves, but in the fundamentals, we're still recovering, and we're still recovering pretty strongly. And I don't see us going back to 2% growth next year. So therefore, I have to buy what's going to work in a recovering economy. We're going to get triple-digit earnings growth into some of these cyclical sectors, and I think you have to go there. Now, what else will work? Tech will work as well. We've got negative yields of negative 1.05%. When you got negative yields like that, your tech is going to work because there is no alternative. So a lot of things work mid-cycle here. I'm not scared. It is long overdue. It's not surprising that COVID has resurfaced here. Yeah. But again, American exceptionalism will get us through it. And as a market matter, and I want to be very clear about this, I'm not making light of the health issue. I don't want COVID, right? We don't want COVID. I'm not making light of it. However, as a market matter, I think for the most part, the market has moved on, and this will be seen as a hiccup.
We'll move on and talk about space in a moment. Alicia, I've been meaning to ask this because so many listeners, viewers, people who watch Bloomberg TV reach out and ask, is that an Imperial Star Destroyer sitting just behind you? Is that what that is?
It sure is. It's a Lego Imperial Star Destroyer, 4,780 pieces. And actually, one of my sons wants to be an astronaut, and he's learning to fly a Cessna.
John, did she spend the $28 million?
Was it you, Alicia?
Was it Alicia?
Do you have it? Was this the scheduling conflict? Was this it?
Not me.
Do you want to do a shout out to your son, Alicia? I assume he's going to be watching this in about 20 minutes.
That's right. He's learning to fly a Cessna. He wants to be an astronaut. And so I think, to your earlier conversation, this is a wonderful thing for the imagination for our country. Our country produces people who imagine these kinds of endeavors and puts capital behind it and does it and allows teenagers to dream. And I think it's great. So shout out to all the dreamers and the creators out there. I think it's great.